The Hang Seng is up 115 points. We have the Taiwanese index, which is higher as well.
It would be catastrophic for the American economy and the American people if we didn't pay our bills.
Supports for the market lay at the 20-day moving average, which stands at 18,053.
Stock has underperformed in the last 1 year or so. So, it gives some room out there as well.
There's a nice, clean 90-point pullback that we're seeing on the index.
In the immediate term, we don't see as many large orders as we have seen in the past.
What really excites me is what I call New India, which is made up of high-tech sectors.
Rijiju, who's been holding fort at the Law Ministry, has been asked to relieve that position.
Indian markets are holding up in the green, but the gain is muted compared to the rest of the pack.
Any amount that you spend on the credit card will form part of your LRS limit of $250,000.
We're learning from our sources that subsidies will soon start getting dispersed, possibly in the next 2 to 3 days.
For the markets, we have come off sharply from the highs, 100-point there on the Nifty.
Okay, you're with us here on Closing Bell, and I'm Prashant. With me are colleagues Rima and Surabhi. We're coming to you, of course, from the CNBC-TV18 Motilal Oswal studios. Markets are, well, what should I say? They are neither here nor there. Absolutely flat is, what the index is at least showing right now. And it's been actually a slow kind of a sell-off, right? I mean, almost on... slow burn, market's been selling off. It's been selling off all day. It halts for half an hour, 45 minutes, and then there's another leg lower, and that's basically been the price action that we had. I mean, we got one decent move in the morning, and that's about it. After that, it's been downhill. 18,174 is where we are at. Financials are on both sides of gainers and losers. I looked at what is moving the Nifty. On the gaining side, it is private banks and Bajaj Finance. On the losing side, top was SBI, the last I checked, and then ITC. SBI numbers, which we will talk about more in a bit, and the management will also join us with comments on the press conference. The numbers seem pretty okay, but it could be pre-positioning going into the numbers. The stock is not doing very much. Just two levels I want to put out. On the Nifty, the low yesterday was 18,115, and then the 20-day moving average comes in at 18,080. So these are levels on the downside, which hopefully the market will not break in the next 60 minutes. On the Bank Nifty, the low yesterday was 43,446, and that's the level which needs to be protected. In the morning, I was saying that today is a session where you will perhaps start to understand whether what we've seen, which is the sell-off we've seen over the last 2 or 3 days, is something more or just a nervous kind of a shakeout. And today's price action is not very encouraging because, I mean, the global handoff, etc., was positive. Even now, I mean, if you look at what Europe is doing, I mean, it's broadly in the green. The European stock indices are broadly up about 1% or so. Rima, hi.
Hi. Monday is the day when we went almost to our all-time high levels on the Nifty Bank. Tuesday, Wednesday, we sold off. And today as well, the markets are down 120 points from the day's high. So although we are flat on the benchmark indices, from the day's high, which was closer to about 18,300, there has been quite a slip in trade. To quickly run you through some of the big movers, Bharti Airtel is moving higher in trade, reported numbers yesterday. A fairly resilient performance on margins. The street likes the free cash flow generation, and the stock has seen some buying interest. Private sector banks, as Prashant pointed out, are nudging higher. Asian Paints is up and about in trade. But on the losing side, softness seen in pharmaceutical names. So Divi's Laboratory, Dr. Reddy's under pressure. ITC is down 1.4%, reports numbers expected closer to, I think, 4 o'clock. So ITC is selling off. Softness seen in Titan, that's down 1.2%. Again, at the day's low over there, Britannia, HUL. So across the board, the FMCG basket has seen some cuts today. The Nifty FMCG index itself is down nearly about 1%. But it's all about the earnings reaction, right? State Bank of India, GAIL, Arvind, so many of them.
Yeah, absolutely. Just to add to what you folks have already said, today's underperformance in India has to be seen in context with the fact that today is a green day in global markets. Most of the Asian markets have done well. Europe right now is up between 1% to 1.5%. We are ignoring all of that completely and remaining extremely range bound. So possibly, tells us that technicals are really in play at these levels of around 18,400 on the index. That's proven to be a bit of a formidable level, at least in the short term. That's what the last couple of sessions have told us. SBI is a very, very interesting number. Pull up the SBI stock. Now, on the face of it, technically, you can't find fault with the numbers at all. In fact, one could have argued that considering the net interest income was a whole 1,000 crores above a poll. Very, very solid performance on the net interest income. Net profit also substantially higher than estimates. The NPA levels have reduced at the gross as well as the net level. So one could have argued that the market could have seen a sharper reaction. It's not like the stock rallied going into numbers. Stock's absolutely flat over the month gone by. But perhaps the argument can be on the fact that there is lower provisioning that SBI has made. So SBI is not talking about the ECL provisioning at all right now. And slippages have increased a little bit. So let's see. It's a big stock, big barometer of what's happening in the sector overall. And we will wait by for more management commentary. But from what I could see, Prashant, barring the slippages where you can kind of debate, and the fact that they haven't really started making these big ECL provisions, barring that, I mean, can't really sort of find fault as such optically.
I think it just could be positioning, right, going into the numbers, and maybe the expectations were, the actuals are perhaps closer to where the expectations were at, and we've seen that play out. But if the underlying is positive, sooner rather than later, markets do react. I mean, it could be the next day, it could be the day after, but we've seen the story play out. But, as I said, we'll hear from the management in a bit from now. How should you position yourself in the last 60 minutes of trade? That's the question. Rahul Mohinder is back with us with an assessment. Rahul, afternoon. What would you say? I mean, once again, all gains gone, flat. And what is it telling you about this? These are not signs of a strong market, right? The general take has been that this is what we've seen is a pullback within a broader uptrend. Does one need to start to doubt it?
Well, great question, Prashant. I think even last week when I was on the show, I mentioned, 18,450, 18,500, that's the big block hold. We've got stuck there. And yes, we've corrected something like 2% from those peaks. And we haven't even broken any key averages. I heard you talk about the 20 DMA. So, even several other indicators were yet to really enter into, a point where one could, on a confirmed basis, say that, okay, medium term, we've gotten bearish. But, I think we're at that tipping point. We're at that fulcrum point, which is very interesting. And 18,050, as I pointed out even yesterday, a very important level on the Nifty spot. And, when I try and corroborate that with some of the index heavyweights, if a stock like ITC starts breaking, a level of 470, if you're looking at 2420 on Reliance, we're very close to these numbers. And, that's where I feel that, if levels like this break down, 420 on an ITC, 2420 on Reliance, as I said, this will all add up. And, and that's probably going to lead to a breakdown. So I think we don't really have an immediate answer yet. But what I'd say is the level we are at is very, very essential. Even if I could add to that list something like TCS, 3180, very important level. These levels breaking, I think 4 or 5% slides on these stocks are going to come, and that's going to play out on the Nifty spot. So I think keep vigilant, keep your eyes open to that 18,050 level. If that starts breaching, I wouldn't like to keep long positions open.
You don't want to keep long positions open. Let's talk about some of the big movers. GAIL reported numbers look like a big miss compared to what the street was anticipating and much weaker than what peers have reported. Sonal is here with the key take. Sonal?
Thank you so much for that. Well, still wrapping my head around these numbers because they are much weaker than what was expected. Yes, it is a sequential improvement, but it is not improved the way analysts on the street had expected it to be. Now, the stock is at the day's low currently. Petrochemical segment that continues to report a loss, and losses have actually expanded versus peers like IOC or Reliance Industries that showed an improvement in their petrochemical spreads because petrochemical cycle had improved on a quarter-on-quarter basis. Additionally, marketing segment, that was a big miss as well, and a lot of one-offs that we've seen in the transmission segment as well for GAIL this time around. So to run you through the numbers, revenues have come in at 32,858 crore rupees, which compares with an estimate of 35,272 crore rupees. EBITDA has come in at 307 crore rupees versus an estimate of 1,525 crore rupees. Now that's a big miss. In terms of margins as well, the company has reported margins of 0.9%, which of course is an improvement on a quarter-on-quarter basis, but much lesser than Polar 4.4%. Profits at 600 1,503 crore rupees. It compares with a poll of 1,043 crore rupees. Now, if you look at the segments, first up with the gas transmission segment, there was no expectation of a loss here. The company has gone ahead, reported an EBIT loss of 16 crore rupees. A lot of one-offs which are not there in the notes to accounts as well. So that is something we'll need more clarity from the management on. LPG transmission, the EBIT has come in at 79 crore rupees, which has declined on a quarter-on-quarter basis, which was an expectation of an increase here. Marketing EBIT at 487 crore rupees. Of course, it has improved, but the expectation was of a bigger improvement to the tune of 1,000 crore rupees. Petrochemicals, the losses have expanded here to 400 crore rupees versus an expectation of a loss of 233 crore rupees. Similar is the case with LPG and liquid hydrocarbons. 122 crore rupees has been the EBIT, which has improved, but still lesser than expectations. So a lot of clarity is needed in terms of volumes. What were the one-offs in the transmission segment? Because remember, Q3 was impacted because of Gazprom supplies, a lot of inventory adjustments as well. So it was expected that Q4 will be much better, but that hasn't come by. So the stock at the day's low as we speak.
All right, got that, Sonal. Thanks very much. Yes, Gail reacting to what can only be described as a disappointing Q4. Well, let's bring in Gurmeet. Lots of numbers, lots of big companies to discuss in the market overall. Afternoon, Gurmeet. Always great having you on. You have your work cut out for you. Let's kick it off with Gail. God alone knows what happened. As Sonal is saying, we need to hear from the management to understand, but this is a miss on several parameters, the petchem business and a couple of other segments, as she described. What's your view on the stock?
So Surbhi, obviously negatively surprised considering the numbers IOC reported, especially the weakness in the petrochemical segment. And GAIL has various businesses. And I think it's probably across all segments, as Sonal also pointed out. So we'll probably wait for the management commentary to play out. But in general, I think these plays, whether it is IOC on the other side or GAIL, are anyways tactical. You can't have a fundamental view. The frequent changes in policy. Then there was an added element of windfall tax, which was impacting near-term performance, frequent changes there. So it's not something we are considering as far as our portfolio is concerned.
Okay, that's well put. Tactical, can't take a very long-term view because the view will have to change frequently based on all the changes which come through. I just want to quickly highlight, Gurmeet, hi, afternoon. Just want to highlight what's happening on the rupee as well, if we can. I think the rupee is slipped, and let's have the dollar-rupee rate coming up and see what's happening there. By the way, the Nifty has also come off a little bit, 31, 32 points. There you go. That's a sharp move higher on the currency. That's 21 paise and 82.58. And I think the move is, not bulk of the move, but some of the move, extra move has happened in the last 10 minutes or so of trade. Which is coming through. It's been remarkably stable. The dollar is strengthened. Other Asian currencies have been under pressure, but I mean the rupee has been steady. The recent trade deficit numbers, FPI inflows, I think all of that has helped. But we'll see how this one is going to impact. It's got a correlation with equity markets as well. For now, I mean these are near-term moves that we are tracking. Now let's get back to the big number, right? State Bank of India, which delivered a very strong set of earnings, and Abhishek is standing by to capture the essence of what we should take away from the State Bank fourth quarter results, full year numbers. Abhishek.
Well, Prashant, it's been a fantastic quarter for State Bank of India. Take a look at the deposit growth. On a sequential basis, it's at 5%, which is perhaps the best in last 4 quarters and the second best that you are seeing in last 11 quarters. Net interest margin, despite the strong deposit growth, is the best in last 8 years, which has helped the return ratios being robustly on the higher side and one of the best in last 8 years. So the net interest margin has come in at 3.6% when compared to 3.5% in the previous quarter. ROA has improved by 15 basis points to 1.23%, and for the fiscal year ending, the ROE has improved to 19.4% when compared to 18.6% that they had for the December results. Gross NPA ratio and net NPA ratio are one of the best that you are seeing in last 8 years or even more. Gross NPA ratio is down to about 2.78% and net NPA ratio is down to about 0.67%. Now, credit cost for a quarter on an annualized basis is perhaps the lowest ever that they have recorded there at just 16 basis points. Restructured book that continues to decline at 0.74% is the lowest in last 7 quarters. On the loan growth, if you take a look at the breakup, corporate loan growth is pretty strong at 5.9% quarter-on-quarter and about 12.5% YOY. Retail loan growth is also robust at 17.5% YOY and about 5% sequentially. On the flip side, the cost to income ratio that's increased a bit and is on the higher side in last couple of quarters. However, in terms of P&L, both the NI and PAT is a beat on our poll. Back to you.
Good things are at highs and all the bad things are at lows. I mean, things like credit costs at lows, NIMs and everything else seeming to be very, very strong at this point in time. Those are, by the way, visuals coming in on the SBI management, which will begin to speak shortly. ITC numbers are at the bottom of the screen, and we should make a quick reference. On profits and revenues, they seem to be almost bang in line. Maybe profits are slightly higher, but revenues are exactly almost in line with what expectations were. Stock is, though, slipped a little bit, half a percent or so from the time the numbers have come through.
The margin, Prashant, just wanted to point out,
yeah.
I mean, given ITC's rally, it's one of the best performing stocks so far this year, right? That margin number is lower. Yeah, there we go.
It's just
actually 20 basis points lower than the poll. So maybe, I mean, some excuse to sell off. But we don't have the cigarette volume number. I guess that's the big one, right? So waiting for that.
But at all-time high levels, you would nitpick a little bit.
Exactly, you get a little choosy. That's Mr. Khara, I think, speaking now. So State Bank will be back with ITC
with the cumulative effect of adverse stock shocks of the past 3 years, most notably the COVID-19 pandemic and the geopolitical situation in Ukraine, manifesting in unforeseen situations. Spurred by the pent-up demand, lingering supply disruptions and commodity price spikes, inflation reached multi-decadal high last year in many economies, nudging those central banks to tighten aggressively to bring it back towards their target and keep expectations anchored. As a result of all this, the baseline forecast for global growth is to fall from 3.4% in 2022 to 2.8% in 2023 and then rebound to 3% in 2024. However, in this backdrop, India remains resilient to many of the adverse external environment owing to large domestic market. Despite all the headwinds, India's GDP in financial year 23 is estimated to grow at 7%, driven by investment and private consumption. Going ahead, the economic activity would be supported by improving rural demand too. The government thrust on infrastructure spending, revival in corporate investment, healthy bank credit, and moderating commodity prices will also go a long way in terms of supporting the Indian economy. Despite the increase in interest rate and its transmission, credit growth has continued to grow in double digit and has been broad-based across sectors in the financial year 23. During financial year 23, all scheduled commercial banks credit grew by 15% YOY, as against 9.6% YOY in financial year 22, while aggregate deposit of all scheduled commercial bank grew by 9.6% YOY compared to last year's growth of 8.9% YOY. In the Union Budget for financial year 24, several steps have been taken to push up the capital investment in the country, which will eventually boost the credit demand in the country. We expect credit growth to continue in financial year 24 also, although some moderation might happen here and there. In the above economic backdrop, let me now give some color on the bank's number for financial year 23, as well as for the...
Okay, the SBI management has just started and they're setting the context for the numbers, which we will get back to in just a bit. But let's get a quick reaction from Abnish Roy of Nuvama on the ITC numbers, which are flashing at the bottom of the screen. Abnish, we have top line, bottom line, margins, and I think we have cigarette volume numbers as well, which are coming through. What do you make of the numbers? First cut.
Yeah, absolutely. Sales EBITDA is absolutely in line with our and street numbers. So overall, good set of numbers. So I think 5% revenue growth and around 18% EBITDA growth is a good number. In our sense, the cigarette volume growth is around 12%, which is again in line with our expectation of around 11%, marginally higher. So overall, good set of numbers. So this 12% growth in cigarette volume is on a 9% base. So it's again a market share gain for the legal players from the illicit side of the industry. So overall, good set of numbers. So we remain quite positive and we maintain a buy.
It's blockbuster numbers from the hotel divisions of ITC. I think the revenue growth is more than 100%, and the street was anticipating about a 40 to 50% growth. Amish, do stay on. My colleague Mangalam is standing by with the fine print of ITC's numbers and the segmental breakup. Mangalam.
Well, these are largely in-line set of numbers coming in from the cigarette business for ITC this time around. I'm just looking at the cigarette revenue growth that's coming at around 14%. The street was working with a number around 15-odd%. So this means that the volume growth for the company has been around 11 to 12%. Again, largely in line with expectations of 12 to 13%. The cigarette operational performance has seen an improvement about 14% year-on-year. Again, in line with expectations of 15 to 16%. What really has stood out this time around from an ITC numbers standpoint, of course, hotels has grown in triple digits as against a 40 to 50% growth expectation. But that, again, does not surprise the street as much, given the sort of numbers that we've seen from Indian Hotels and Lemon Tree. The star of the numbers this time around for me is the FMCG business. That has shown a revenue growth of 19%. And for the first time ever, the FMCG EBIT has reported a double-digit margin. So that's a margin of around 10.2%. That's a big positive. So this is something that we'll have to watch out for. ITC is finally moving away from the shadows of the tobacco business and coming onto its own in the FMCG pack. So that really, is something that my key takeaway from these numbers would be. Volume growth, nothing really to worry about. The agri business has seen a decline of about 18-odd%. Again, the street was working with a decline of around mid-teens, largely because of a high base. And, the wheat export has been banned this time around as well. So wheat exports were there in the base quarter. The other businesses of the company, the paperboards business, has shown some sort of moderation. But while on a reported basis, just the P&L has been largely in line with expectations. The cigarette volumes in line with expectations. The FMCG really stands out, with the hotel business reporting a near doubling of revenues on a favorable base. Let's see whether that continues or not.
Okay, got that, Mangalam, from what you were saying. It looks like a very solid set with some pleasant surprises in FMCG. Stocks still a little subdued, 1.5% to 2% lower. Abneesh, so that's the question. I mean, we don't know whether there's a kind of a buy on dips that starts playing out later today or maybe tomorrow in the days to come. I guess the key question is, given this kind of performance, ITC is trading at 25, 26 times 1 year forward earnings. Can we see multiples expand despite the great rally of the past 12 odd months?
Yeah, thanks. Definitely 12% volume growth in cigarette is a very good number even in Q4. So my sense is, even if multiples don't expand from here, I expect FY24 to remain quite strong for ITC in all its key businesses, especially in cigarette. I think the market share gain from the illegal industry will continue. In FMCG, just like we are seeing for other FMCG companies, there will be a margin improvement for the full year in FY24. So we don't need a re-rating further. Even if that doesn't happen, my sense is the earning growth will propel the stock. Of course, hotel value unlock, whenever that happens, that will lead to further re-rating in terms of multiples.
Target price, Abneesh, as of now, and would you look to perhaps, I know it's very early to ask you this, but you'd look to add to it given the Q4 performance?
So yes, we have a 485 target price, and we will again look into how FY24 cigarette volumes are looking, how FMCG margins will pan out, because palm oil and wheat crop is looking better than initial expectation. So yeah, we will look into the numbers, but yes, still we have the upside, and we definitely maintain a buy.
Okay, thanks very much, Abneesh, for that. Let's go back to the SBI chairman. Gurmeet, of course, is still with us. Gurmeet, we're coming to you, so hang in there. But the SBI chairman, Dinesh Kumar Khara, is speaking, addressing the press on the numbers. Listen in.
The bank remains very well capitalized, and we have sufficient headroom to take care of the normal business growth requirement. Our capital adequacy ratio has improved by 85 basis points on a YOY basis and stands at 14.68%. CET1 ratio has also improved by 33 basis points and is now at 10.27%. And both the ratios are well above the regulatory requirements. Digital continues to be an important customer acquisition engine for the bank across assets as well as liability products. During the year, we have sourced 64% of the savings bank accounts and 35% of the retail asset accounts digitally through YONO. We have embarked upon a journey of creating digital bank of choice within the bank, as we have moved on to YONO 2.0 for further improvement in our offerings. Our subsidiaries have also consistently performed well and continue to create significant value for all the stakeholders and, most importantly, for the customers. Most of our subsidiaries are the leaders in their respective segment. We will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of SBI. Before I conclude, I would like to thank you all for your continuous support to the bank. We consider it as a privilege to be able to contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. I wish everyone here the very best of health and happiness. Floor is now open for your questions. Thank you.
Thank you so much, sir. Now we move to the media Q&A. I urge the media to raise their hands and unmute themselves when called upon. We request you to follow the format and restrict yourself to 2 questions each related to the results. First up, we have Ritu Singh from CNBC-TV18. Ritu, please go ahead.
Could you help me unmute? Could you unmute?
Hear you, Ritu.
Please unmute. Unmute. Mr. Khara, if you can hear me. Sir, the asset quality, of course, has seen a significant improvement year on year. What we wanted to understand is, in terms of provisioning, what is the thinking? For your NPA provisions, you've almost halved them in the quarter. But with the expected credit loss provisioning expected to kick in the next couple of years, what have you factored in terms of what you would require? Is there an internal assessment? And have you started to make any provisions for that? One. Secondly, also, sir, in terms of your slippages, from 25,000 crores in FY22, now it's down to about 18,400 for the year. Could you guys guide us as to what you're seeing in the coming year as well? The fresh slippages have come down significantly. Is that trend going to continue to play out? And as far as demand for credit is concerned, yes, it's been in double digits for the year. Interest rates have also peaked. Now they're expected to come down. What's your sense? What's in the pipeline? Where is the demand coming from? Are corporates utilizing their credit lines? If you could give us some guidance there as well.
I think one question itself is quite a heavy questions. Multiple questions in one question. You have taken the full advantage of the clause one question. Anyhow, I'll start with the first one, which you have in your mind is something which is very heavy on your mind, is relating to expected credit loss. Well, of course, first and foremost, this is just a concept paper which has been introduced by RBI, and they have not yet formed up their views. And even if they have very clearly indicated in that concept paper also, even if it gets introduced, it will be spread over a period of 5 years. Now, let me share with you. When it comes to the ECL, it essentially means that the provision would be made based upon the expected credit loss. And expected credit loss is a probability of, one is a loss given default, LGD, and also the probability of default. So which is nothing but a reflection of the underwriting standards, and also at the same time, how the book has been. Herein, I would like to draw your attention to the fact that our corporate book is provided to the extent of 98%. And when it comes to our retail component, which is almost as high as about 42, pure play retail is about 42%. There our NPA, gross NPA ratio is somewhere in the range of 0.6. So one, I would like to say that the loss given default as it is low. And even the probability of default, which is nothing but a reflection of the underwriting, what we have seen for last couple of years is a very clear reflection of our underwriting standards which we are adhering to. So in that kind of a situation, I would like to mention that our non-NPA provisions as on date stands at about 35,500 crore plus. So as far as our readiness is concerned, we will simply wait for the RBI guidance in this matter. And once the guidance comes in, we are very well equipped to deal with the scenario. And at some stage, we have done some calculation, but those numbers are much lower as compared to what additional provisions we are already holding in our balance sheet. So first and foremost, ECL as of now is a fiction. And if at all it becomes a reality, we are very well equipped to deal with without having any impact on our balance sheet. We have always followed the principle to insulate the balance sheet fully, and our balance sheet is completely insulated from any future potential events also. Now, your second question, which I can recall, was essentially relating to the growth numbers, whether it is credit growth guidance. And also, your one question was relating to whether the kind of slippages which we are seeing, how will it look like going forward? I think, to my mind, the best of the answer for this question would be to look at our SMA1 and SMA2 book, because this is nothing but a reflection of the likely stress which could be there in the book. So if you look at our SMA1 and SMA2 book, we have seen very clearly that there's a definite reduction in the SMA1 and SMA2 book over the period of time as compared to March 22, where it was 3,544 crores, SMA1 and SMA2. It peaked out somewhere around 8,000 odd crore in September 22, but again it has come down to 3,200 odd crores. We are in a position to have a very effective follow-up mechanism, and we are in a position to ensure that we recover all these stress accounts. So I think, to my mind, the quality should be what we are seeing today. We should be in a position to sustain. The third question was essentially relating to the growth. I think we are witnessing decent growth both in corporate and retail, and also even in SME as well as in agri. So I think, to my mind, the kind of activity which we see on the ground, which very clearly means that we should be in a position to address the economy's growth requirement. And I would like to also add that the macro aspect is something which will be a very, very critical component. And the kind of focus which is there in the economy for the economic activity, this will certainly offer us opportunity to grow as far as our loan book is concerned.
Thank you, Mr. Kara.
Please go ahead.
All right, that's the SBI chairman talking about, the expected credit loss.
He didn't say anything.
He didn't say very much.
He didn't give us a number.
It's the actual default plus expected default based on underwriting standards. But, I mean, he didn't give an exact number or assessment or anything of that sort.
But he did, Prashant, he did mention, the extent of provisioning. He kind of pretty much went out there and said 98% of corporate book provided for, 48% of the retail book is provided for. So he sounded very optimistic, saying once we have the fine print, the actual regulations, because right now this is still a discussion paper. Once it's in writing, we'll kind of cross the bridge at that point in time, perhaps.
All right, well, SBI is still down about 2% or so. 574 is where we are at. The market is not selling off more. We are down about 46 points. 18,135 is where we are at, which means we're practically at the day's lowest point. We have to take a quick commercial break. Let's do that. On the other side, we continue our conversation with Gurmeet, who's been waiting by patiently. And, of course, more earnings analysis coming up as well. Stay with us.
Welcome Welcome back. The sell-off has accelerated a bit now. It's 18,130 on the Nifty, 50 points gone on the benchmark index. At the day's low, GNFC numbers flashing for your screen. Sharp drop in the company's EBITDA. EBITDA down nearly 60%, and the stock has taken a tumble by 6.5%. But let's get to our segment, D Street Chatter. Nimesh is waiting by. Nimesh, what's the buzz that you've picked up today? Despite good numbers coming in from State Bank of India, ITC, the stocks are under pressure. It looks like the good news is priced in.
Yeah, and Rima, you've seen with so many results, right, that maybe the market knows a bit of a hint and there is a bit of pre-positioning, and hence, you don't see that kind of reactions, especially in the large cap names. I think that explains the move in both ITC and SBI. You spoke about Nifty down 50 points, but technically it's down 150 points from the top. So it's cooled off quite a bit from today's highs. It's been consolidating in a very narrow range, the Nifty between 18,100 to 18,300, 18,400 levels. In terms of flow specific, well, today is very specific, very stock specific. Not a particular sector or a particular large cap is leading the market either on the downside or on the upside. The good part is that the broader markets still are relatively outperforming, and there is a lot of traction in the mid cap and small cap space, largely on back of flows. So that explains the move there. I guess from a sector point of view, it looks like there is a bit of churn now, and today is a day for cement stocks to be under pressure. Most cement stocks are under down, largely on back of profit booking. So the sector churn continues, but I guess it seems like the market is in a range bound, but the flows are very stock specific in today's trade.
So what do you have on your list, Nimesh?
Hi Prashant, I want to start with Vedant Fashion because that was part of my chatter yesterday. Despite the OFS of 10% and at a 7% discount, the stock is in the green. Couple of reasons for that. One, I believe that the demand is quite strong in the OFS from larger institutions. And two, once this gets done, there will be a weight increase in FTSE as well. So that will lead to some inflows. And hence, this stock is in the green, despite the OFS where promoted is selling close to 10% stake. So that's the first one. The second stock is Taneja Aerospace. A small stock, sub 400 crore market cap company, but buzzing in trade, good volumes as well. I believe one of the small domestic PMS is an active buyer, and hence we've seen a big move in that stock today. The third stock is JM Financial. This is the third large block in a span of 10 days in JM Financials. Another 0.5% equity changing hands. I believe one of the FI who's likely a clean out trade going on in that space, and some large and some domestic HNIs seems to be buying into JM Finance at these levels. So that's why you're seeing large volumes on that stock. And the last stock is AU Small Finance Bank. Interestingly, the stock is up 2%, being among the top FNO gainers in today's trade at a 52-week high, but there is selling pressure, is what I understand. So it looks like at 52-week high levels, some bit of FIs or some bit of large institutions are looking to sell AU Finance in today's up move.
Hey, Nimesh, got that. Thank you very much for all the buzz on the stocks that you've picked up today. By the way, the markets moved to the lows of the day. We have also breached yesterday's low. Yesterday, the Nifty low was 18,115. We are trading below that right now. Serious pressure coming in. And both the results that have come in the last few hours, they have not helped matters. SBI, by the way, has moved to the lows of the day. 2.5% gone from State Bank of India. And ITC as well is nursing a cutoff a little over 2% right now. It's a sharp fall on SBI. Gurmeet, want to get your reaction on SBI. I don't know if you could hear what Mr. Khara had to say. And I think the question that Ritu, our colleague, started off with, that's on everyone's mind. The numbers are great. Asset quality is looking okay. Credit growth is fine. I think since Canara Bank's results, everybody's been trying to understand what PSU banks are going to signal on the move towards this ECL, this expected credit loss. I don't know if you caught Mr. Khara's reply, but no clear answers. They've in fact reduced their provisionings dramatically in Q4.
In fact, he said that currently it's fiction, right? And I think it will be it's a concept paper right now. I think the nervousness for the market is because of the past experiences when credit cycles turn, and PSU banks have run up. So I think the proof of the pudding is when you will see, consistently the numbers getting added. I think SBI, if you see, I think to me has been a great turnaround story. If you see the year, I mean, forget about this quarter. They started the year at 3.3 kind of NIMs. They're ending at 3.6. If you see, for example, the average yield they make, they started at almost like 7.6. They're ending at about 8.1. Cost of deposits also, if you see, is only marginally inched up for them. Tells you how strong a liability franchise is. Also, Subi, the way now underwriting is done is very different than what PSUs used to do in the past. Now, for example, look at now retail. 1/3 of the retail loans are done digitally through YONO. Right. about 2/3 of the deposits you are getting digitally. In fact, they are opening almost 25,000 accounts on a daily basis. So I think it's so a lot of it will reflect once the cycle turns, and they are well provisioned versus in the past. So if you see provisioning, it's almost 76-77%. So my sense is the market probably wants to see over a period of time, once the credit note moderates, how these slippages and all will shape out. And also I think the stock run up also. So it's bit of because of the expiry today and some pre-positioning also.
Gurmeet, but should one have a pecking order when it comes to these large cap PSU banks or the private sector banks? Because across the board, the numbers have been good. I was looking at the loan growth numbers. For State Bank of India, it's about 17%. Bank of Baroda, 16.3%. ICICI Bank, about 18.5%. Axis, ex of Citi, the core loan growth was about 16%. So pretty similar. And all of them have reported an improvement in asset quality. So how do you pick, the winner amongst these, or do you just buy a basket?
No, so, I think PSU SBI remains, for the year, they have done 50,000 crore plus PAT. So you're technically getting it at 10-11 times, earning 1.2 book value. I think the valuations are very reasonable, right? Bank of Baroda also, I think, can be considered, but SBI more structural and Bank of Baroda being more tactical. I think Axis could play some catching up game. It's already caught up, if you see, from 850 to 920 odd levels, because it had that one-off with the Citibank acquisition. I think gradually there also you are seeing a culture change from old UTI to since Amitabh has taken over, something what ICICI has seen under Sandeep. So I think that's another one which you are looking at. Again, 1.8 book value. So I think a lot of the banks, in my view, valuation, despite Bank Nifty at close to 44,000, the valuations don't look stretched to me. The returns obviously would be more modest now. We've had a great run, so you got to be there. Even HDFC, for that matter, I mean, at 1650 is still 7-8% from its high, which anyways it's not done that well for last 2-3 years. So I think I remain steady. I would also like to probably now look at some niche plays like Home First in affordable housing, a bit of some good NBFCs, something like Poonawalla, something like Chola. I think there's some catch up there also, which will happen.
Okay, all right. By the way, you added Home First to the portfolio, Gurmeet? Are you thinking?
We have Poonawalla in the portfolio,
Poonawalla.
And we were lucky to enter much earlier. Home First is part of the investment universe. Yeah.
All right, fair enough. Thank you very much, Gurmeet. It's a pleasure, and thank you so much for waiting all this while we were on those results and the press conference. Appreciate it very much. Okay, well, let's take a quick commercial break here. On the other side, we'll get you, some trading ideas. There's 16 minutes to go for close. What to buy or sell tomorrow for a reverse trade? Buy or sell today for a reverse trade tomorrow. That's what is coming up. Stay with us.
Welcome back. So it's volatile, but there is some semblance of recovery as well now. 18,124. So again, we are just a little bit of a way. We are above yesterday's low, intraday low levels. We've got Rahul Mohinder back with us. Rahul, so there's been pressure throughout the session. What now? What's the advice and any more ideas?
I think despite what we've seen in ITC and SBI, which, just technically, just not sounding myself to results, etc., it's not closing the right way. It's probably closing below some levels which are pointing more towards a slight downside. But keeping that whole theme in mind, I think what I do is take two short positions. One would be selling Kotak Bank, and the other one would be selling Tata Steel. I think 1885 is a target I would trade for on Kotak Bank, keeping a stop loss at 1945. And Tata Steel, in the near term, 103.8 would be my target, breaching which I think it opens up much more towards about 97, 98 levels even. So I'd go short on the stock with 107 stock.
Rahul, no long positions in individual stocks?
See, there are individual names like Bajaj Finserv, etc., which one could take, but it's just that the way the markets are poised, I don't think that, SBI is a worry factor for me. ITC is a worry factor, but I think if I had to pick one, Bajaj Finserv looks reasonably okay for a 1460 target. Keep a stop below 1400, yes.
Okay, well, we'll take a quick break here. We'll come back. More market talk on the other side. Amrish Baliga will be with us with his picks. He gives out one idea that he likes and explains it. So that's coming up in just a bit. Okay, well, it's not a clean waterfall kind of a decline. The market is, as I said at the beginning, it's a slow decline, and that's the way it's progressing. But the fact is, the direction is clear. It's successively making lower lows. 18,133 or so is where we are at this point in time. Now, Amrish Baliga, as promised, is with us. Amrish, good to have you with us here. Tell us, you like KEC International, right, Amrish?
Yeah, KEC International, because it's one of the largest power transmission, tower manufacturers and power sector EPC contractors in the world. Also into EPC for railways, civil, urban infra, solar, smart infra, oil and gas and cables. Has operations in about 100 countries. And there's a strategic shift in the last couple of years from T&D to non-T&D portfolio. So currently it's about 50-50. Whereas it was just about non-T&D was just about 13% in FY16. So there's been a very clear shift. Railway segment is also likely to be a key earnings driver over the next couple of years, led by the strong order inflow. Currently, about 13% of the order book is railways. Also, KEC's order book for civil construction vertical, considering that governments increase spending on urban and water infra, metro, data centers, industrial plants and factories. So that consists of about 30% of the order book. So overall order book position is quite robust, about 30,000 crores plus. And there's also a very strong bid pipeline. So visibility is excellent. But they reported mixed Q4 earnings. So revenue growth was about 29% and we had a margin miss. So the stock corrected decently well. It's corrected about 50-60 rupees from the recent high which we saw. A recovery of funds from Afghanistan project, which has been stuck for a while, that is expected this quarter, and this could be a minor trigger in the next month or so. So expecting a 17% CAGR for revenues over the next 3 years, and FY25, I'm expecting an EPS of about 34. So with that, my target price is about 612.
Amrish, to stay on, GNFC has tanked 10% in trade. Sonal is here with the numbers. Sonal?
Well, yes, it was a weak set, but do remember the stock was up so far this month 11%, and that takes into account the 10% fall that we are seeing right now. So the stock had surged ahead of numbers as well. Having said that, yes, it is a weak set. There has been an operational miss this time around for the company, an EBITDA decline of almost 58%. The revenue number also has come in lower on a YOY basis. Margins have contracted for the company. Net profits are down 48% to come in at around 500 crore rupees. Again, as the EBITDA showing on the screen, it has come in at 370 crore rupees, which compares with 884 crore rupees in the year gone by. It is led by their fertilizer segment. So if I go by the EBIT reported in both the segments, fertilizer segment has reported an EBIT loss of 138 crore rupees, which compares with the profit in the quarter gone by and also a smaller loss in the year gone by. So losses actually in the fertilizer segment have expanded. In their chemicals business as well, their EBIT has halved on a YOY basis, 467 crore rupees versus 860 crore rupees. Remember, we spoke to the management of Sheela Foam earlier today. They spoke about TDI pricing, which is actually a product for GNFC. Pricing has come down from levels of 300 rupees per kg to around 220 rupees per kg. They expect the pricing to remain at current levels as well. So some pressure seen in the chemical segment as well. Management says, especially in Q4, in the fertilizer business, there was an impact of energy repricing. There was a retrospective energy norm which was reset by Department of Fertilizer, and in case of urea, that is, and that led to losses in fertilizer segment. And chemical segment was also impacted because of lower input costs and lower fixed costs. That, of course, led to lower revenues here, and realizations and volumes were also lower in the chemical segment, and that's why chemical segment was lower. But going forward, they say now raw material prices have stabilized. They expect realizations to be better as well. Additionally, they have a capacity of 50,000 tons, which is expected to start commercial production in their Dahej complex for nitric acid. They expect incremental revenues to come in from there. They also have projects worth around 2,200 crore rupees, which are ongoing. So the outlook is positive, but yes, because of pre-positioning and weak set of numbers, the stock is seeing such a big decline right now.
Thank you very much for that. Amrish, any thoughts on GNFC?
Yeah, I think it's a major miss. Like the stock had rallied from 500 levels basically because of the market rally as well as the government-enforced dividend policy. So because of which we saw those levels above 600. So I think it's quite natural that it will correct now, and possibly we could see levels of about 550 or so.
Got that. By the way, looking at result reactions, JK Tyre is quite severe right now, as is Thermax. And this is interesting because these are companies that reported very decent numbers. The stocks weren't that bad off in the morning, but now there's serious pressure on some of these names. That's JK for you. Let's pull up Thermax as well. Down 7.5% as we see things. Amrish, any thoughts on either of them? I mean, Q4 numbers look good even for JK. I remember there's a lot of margin expansion. Management struck a pretty optimistic note on demand. Any thoughts before we wind up?
Yeah, Surabhi, I think all of them have the same string in the sense the stocks had moved up decently well. Even when you talk of ITC or SBI or JK Tyre, what you're talking about, despite decent numbers, better than expected, you have some sort of correction because finally when the results are out, the reason why people had bought the stock was for the results. So there would be normal profit booking. And I don't see too much of a cut for these stocks. Especially if I'm talking of JK Tyre or a ITC or a SBI.
The other one is GAIL, which has lost quite a bit. Actually, there are so many names which are earnings related. Endurance, I think, reported numbers. That is a big cut that we are seeing. Metropolis had reported numbers. That was a miss. That's correcting, of course. It has been correcting for the last couple of days. So it's a broader markets which seem to be taking the brunt, and it's a long list of losers, volume-led losers today that we have. Market breadth is negative as well. 1,350 stocks are lower and about 914 stocks are higher. Amrish, thank you very much for joining us. Good speaking with you. As always, Amrish's stock, in case you missed it, is KEC International, which he put out as an investment idea. Thanks very much, Amrish. Well, let's just wrap up things. We will end about, 45 points lower at 18,136. So that's the level at which we will close, almost at the day's low, basically. The Nifty Bank will end higher by about 0.18%. It's thanks to names like Kotak, ICICI Bank, Bajaj Finance, which did well. On the losing side, ITC and SBI were the two biggest losers. Even in terms of index point contribution, those were the two big drags. But you also had, I think, names like Divi's and Adani Ports, which were under pressure in terms of trade. And of course, then there is the broader market, which we've been discussing. So many names with volumes both up and down, more down than up today. Rima.
Well, some more losers in the large cap space. So giving Divi's company on the way down, you've got cuts in Dr. Reddy, so that's under pressure. Many of the FMCG names were lower in trade. So Titan, Britannia, HUL, all down close to about 1.5%. On the gaining side, Asian Paints stands out. In the IT pack, IT was under pressure, but HCL Tech was up close to about 0.5%. But the story was in the broader market. JK Tyre down 10% despite numbers. GNFC weak numbers, stock ends lower by 9%. BLS, there was a large trade today and the stock was down 6%. GAIL, across the board miss, much lower than what Street was anticipating, and the stock slipped close to about 3.5–4%. REC, weak numbers, particularly on the margin front. The spreads disappointed the Street and the stock took it on the chin. But gaining side, it's consumption, right? Restaurants and EIH. Look at all these stocks.
That's true, Rima, but I'm still more focused on the mid-cap underperformance today. Something seems to have turned. Now, it might be just a one-day phenomena, so let's not get ahead of ourselves. The mid-cap index has underperformed the Nifty today, and some stocks have sold off on bad results, sure enough. But there are stocks that have sold off on good numbers as well, and one of them would be, for instance, a Thermax. The other one, JK Tyre, that we were just discussing with Amrish as well. Thermax, strong management commentary, talking about a pickup across sectors. You can argue they've kind of reorganized their business. Now there are 4 verticals. Maybe the market's making sense of that. But even JK Tyre, there was nothing wrong with the numbers of the commentary, and yet a lot of profit-taking going on. Perhaps an indication of a hint of caution which is there in the market. Not to say that caution is a bad thing. Bell's gone off. Mid-cap market a little underwhelming today, but yes, let's not leave with only the losers. Indigo paints a green picture. KRBL, AU Small Finance Bank. These are some of the winners on the upside as well. And on a happy note, food, Rima, you mentioned that. So restaurant brands from the QSR space has been the big gainer of the day. 12.5% up on that one. Honeywell as well, 6.5% up. So all's not lost, but some caution in mid-caps for sure.
And with that, we're going to wrap in closing bell. On the other side, we get you excerpts from CNBC's exclusive conversation with the Tesla CEO, Elon Musk.